So Clive, Scotia Group continued to witness strong results, delivering solid profit outturns and even commendable segment performances up to the end of its 9-month period in July. What led to this growth for Scotia Group?
Interestingly, long before there was COVID, long before this, the international global situation, the commodities issue that resulted in, the interest rate, the new global interest rate regime, long before that, Scotia had begun some restructuring, strategic long-term restructuring and reorganization, and they began consolidation, they began cost-cutting, they began looking at their long-term objective and what products they offer, what services they offer. So they began streamlining, efficiencies, all that long before that. So I think they were in a position, their balance sheet especially was in a position to kind of absorb some of the blow of this new high interest rate, raising of interest rate, the policy rate. So they were in a particular position. Also, I think we have heard financial companies talk about retooling in the sense of the application of technology. I won't say they're one of the first, but they have been very verbal and I would say on time in delivering some really very creative, access to their client base through technology. And that again has helped them to reduce their costs, but also to re-engage their client base, right? For example, I'm one of their clients and I can tell you some of the tools that they now have and I can use easily to access and do business is just great. I think I'm doing a little bit more activity now than I was perhaps a year and a half or so ago. So that in terms of its total structure, it has done a lot to improve. Now, of course, we know that also Scotia its fundamentals is good. We have seen their loan book. We have seen mortgage, insurance doing well. We know that they sold some entities, right? So they have really, expanded their cash balance through those activities. But also, Scotia has continued to pay dividend. The market is, I think, the psychology. There's a shadow over the whole economy, especially the financial institution, listed financial entities, and that is the high interest rate regime that we're experiencing now. And I think that is impacting the performance of every financial company we know, including a Scotia, that fundamentally I think is one of the strongest financial companies, listed financial entities now. And consistently paying dividends, consistently rewarding the shareholder. Albeit they paid a little less earlier this year, but they're paying much more now. Certainly not what they were paying 3-4 years ago, right? But they're consistent in paying dividend. And because the price is low, the yield is significantly higher, perhaps more than twice it was 3-4 years ago. Right?
Oh.
So yes, so the stock really is very favorable, but it is impacted by the overall performance of the market. That cycle that the market is enduring right now impacts every single security, including good stocks. An economist, Samuelson, once said on the reverse side that in times of when economies are doing well and the market is doing well, even poor stocks will do well, and every reckless fool can look like a good financier. Well, the reverse is true, that the good companies, the strong companies, well thought out, good strategy going forward, that have leaned up their financial statements, right, has good cash flow, will not perform as well, in a market, in a down market. And I think that is impacting Scotia. Yeah. But however, the recommendation is prices are as cheap as they will probably be in the next 5-6 years. They say that these cycles, international cycles, occur probably about every 10 years. Maybe you might have some local domestic cycle crisis also. However, if you look at the last several years, we have had 2008. I'm not sure I've had a big global cycle until, of course, COVID, right? But use that as an example. Prices are very cheap now. Results are, even quite a few financial companies are good, fair to good. So I don't think you will get prices at this level in perhaps the next 5-6 years. So we encourage everyone to begin to buy. Incrementally.
So where Warren Buffett said, be greedy when others are fearful.
Exactly.
And fearful when others are greedy.
Exactly.
Now is a time when most people are fearful.
So, interestingly, in our meeting, we have a little Monday morning meeting with our, team. And I said, look here, when the Chris Brown thing was going, you cannot go to one of these microfinancial agencies and borrow the 1.5 million and buy stocks. They won't know if you got the Chris Brown's show or not. Right? But prices are very cheap now.
Well, I mean, if you were to do that, at least there's some collateral, because you can use the stocks as collateral. You can't use the experience of Chris Brown as collateral if you borrow the money for that purpose.
Exactly. And if you think long term, just looking at the performance of the market in the past, if you think long term, remember, our economy, the structural part of the economy is fairly stable, the fiscal part, that is, right? So once interest rates starts trending downward, especially the financial entities, we expect a quick and strong recovery. So, but the horizon should still be long term. That is within, we think 3-5 years time, right? You should get back a generous return far in excess of whatever interest you perhaps would have been paying on that, supposedly the 1.5 million Chris Brown show money, right? So put the money in investment.